We will now move on to the next problem in A16. Take Limited has borrowed rupees 30 lakhs from State Bank of India during the financial year X1, X2. The borrowings are used to invest in the shares of Give Limited, the subsidiary company of Take Limited, which is implementing a new project estimated to cost rupees 50 lakhs. As on 31st March X2, since the said project was not complete, the directors of Take Limited resolved to capitalize the interest accruing on the borrowings, which amounts to 4 lakhs, and add it to the cost of the investment. Comment. Now, you have borrowed 30 lakhs from the State Bank of India and you have invested in the shares of Give Limited. The question is whether you can capitalize the borrowing cost to the cost of the investment. That is the question. 4 lakhs is the total interest. Can we add up the interest cost to the cost of the investment? The answer is no. This is prohibited as per AS 13, right? As per AS 13, accounting for investments, you can add up only the brokerage, commission, and other acquisition charges for acquiring an investment. But interest on loan or interest on borrowings cannot be added. That's point number one. Point number two, as per AS 16 as well, right? To capitalize an interest, it should be a qualifying asset. Shares is not a qualifying asset because it is already there. It is not. It does not require any substantial period of time for its intended use. It's already there. It's ready. So shares per se, it's a non-qualifying asset. So the idea of the company to capitalize the 4 lakhs to the and add it to the cost of investment is not tenable. That is the answer. So if you could go through the answer, they would have discussed from 2 points of view, one from AS 13, another from AS 16. Look at this. As per AS 13, accounting for investments, the cost of investment includes acquisition charges like brokerage fees and duties. In the present case, Take Limited has used borrowed funds for purchasing shares of its subsidiary company. Give Limited 4 lakhs, interest payable by Take Limited SBI cannot be called as acquisition charges. Therefore, it cannot be constituted as cost of investment. So this 4 lakhs cannot be added. So this is from the angle of AS 13. Now, if we come across AS 16, we have a different, the same conclusion, but an added evidence to that. Further, as per para 3 of AS 16, a qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. Since shares are ready for its intended use at the time of sale, it cannot be considered as a qualifying asset that can enable a company to add the borrowing cost to investments. Therefore, the directors of Take Limited cannot capitalize the borrowing cost as part of the cost of investment. Then what's the remedy? It has to, right, to be charged to the statement of P&L for the year ended 31st March X2. Right? So this treatment is prohibited as per AS 13 as well as AS 16. So you cannot capitalize the borrowing cost. You need to take it to, you need to charge it to the statement of P&L. Okay, pretty straightforward, but very important. Hope it's clear.